During the 2008 financial crisis, Warren Buffett invested billions in Goldman Sachs and Bank of America. But this is now coming to an end as Warren Buffett has finally sold part of his stake in Bank of America as well as several other banks. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Warren Buffett of Berkshire Hathaway has just sold his S&P 500 as well as his VU holdings, which is the major elephant in the room, and I think it has to be talked about. So we're going to talk about everything that he sold as well as everything that he added on to and why he potentially did so and what we can expect going forward. All I ask you to do, it's free, like the video, subscribe to the channel, and drop a comment down below to engage the algorithm. First, let's talk about the positions that Warren Buffett actually sold out of. One of them including SPY, VOO, which together had a total value of $45 million at the end of Q3 of 2024. This is a main key point that I wanted to bring up, is that it is not a huge part of his portfolio. However, it is still over $40 million worth of stock in the overall market. So why did he do this? Well, if you don't know, he is now holding a record cash pile of over $325 billion. This is accumulation from significant strategic stock sales, just like the chunk that he just sold out of with the SPY and VU. He also recently has been scaling out of Apple, but his position remains the same, at least for today's video, with the newest data that we have. Now, Buffett's cautious approach in investing is influenced by overvaluation of the market. The S&P 500's price to earnings ratio is currently 67% above its historical average, suggesting inflated stock prices driven by investor optimism are what's causing it to rise rather than intrinsic value. Additionally, the total market capitalization has reached approximately 200% of US GDP, a level Warren Buffett has previously associated with heightened risk. So he talks about how the overall market is way overvalued and that it is driven by optimism rather than intrinsic value, and he is finally letting go. Because at some point, when the optimism comes to an end, it just takes a very negative catalyst to actually wake people up. We have been talking about the market being overvalued for quite some time now. While the SPY is rising, the overall market is rising, liquidity is drying up, and at some point we will reach a top. Now, in my opinion, this gives a major warning for the market, but let's keep talking. Warren Buffett also sold out of Ulta, another small investment for the company. Now, Ulta is sitting at a $16 billion market cap, just like Domino's, which Warren Buffett actually added to. However, Ulta has some growth concerns. The trailing 12-month earnings per share growth is at 1.3%. That means it is well below the average of between 8 and 12%. Also, the current year EPS growth is below expectations, as well as next year's EPS growth showing some negative signals. Trailing 12-month revenue growth 4.43%, barely meeting the industry range. Next year's growth is also below the industry's norm, and even the 2-year earnings per share growth stack is way behind, in fact going negative. So there are major red flags. They also have valuation issues. The price to book is way too high, showing that Ulta's stock price is actually overvalued. Their PEG ratio is well in the negative, not justifying any valuation that the stock is trading at. Weak cash flow, no dividend, gross margins are alarming. In my opinion, Warren Buffett has rightfully sold out of Ulta Beauty. On top of that, it's trading at $365 a share, which at some point, I think this bubble is going to pop on this stock and will have a major correction, just like something we've seen similar to Elf Beauty. Now, given I actually do like Elf Beauty as a company, I think Ulta's about to see something like this, and Warren Buffett got out just in time. But did he get out just in time for the other plays as well? Now, Warren Buffett actually sold some of these banks, which is also very alarming on top of the overall market. He sold shares in Bank of America, given he still holds some of these banks. He also sold shares in NU Holdings, Citigroup, and Capital One Financial. Now, if we go and we take a look at these banks and compare them, taking a look at their valuation as a whole with all of this data that we have, the first thing that we can see is, like everything else, just like Warren Buffett has explained, an overvaluation. Bank of America is especially high, trading very expensive for its projected growth. However, looking at the price to book, we're actually seeing that Citigroup looks relatively cheap. Now, the other ones aren't too overpriced, but they aren't cheap as well. Their forward price to sales shows that Bank of America looks actually expensive. See right here, Bank of America sitting at a 3.5, when many stocks in the sector trade at a 1.8 to 2.6. Let's get this rolling a little bit. They have profitability issues across the board. Citigroup showing the weakest. They have major growth red flags over the next couple of years. Capital One has room to increase their dividend potentially, but the other two, not so much. Now, all of these things combined show that these bank stocks are actually very much so overvalued. And on top of that, over on this channel, we expose a lot of the data that has to be dug out from the depths that is not necessarily shown to the public. And we can see that the banks are just overall not healthy. Now, I do think he rightfully so sold out of Bank of America, especially coming to the high of this range, anywhere above $44. I do think he potentially rightfully sold out of NU Holdings. Capital One, I think he rightfully sold out of. I just want to state that with Capital One, with NU Holdings, there could be potentially more upside. And then with Citigroup as well, I don't think he rightfully sold at the right time, but he sold at a good time. I think Citigroup actually has room to run up to 112.30 and potentially 156.85 before collapsing in the long term. But again, that's just my opinion. Now, moving on, he increased his holdings in Sirius XM to 116.1 million shares, valued at $2.68 billion, as well as Occidental Petroleum and Domino's Pizza DPZ to almost $1 billion. Now, let's talk about that very briefly. Siri is an interesting one, right? We've seen him originally pick this up recently, and it's very interesting because if you take a look at the chart, it looks like a failing company here. It looks like it's trying to hold up and hold its value, and it has over the long term, but normally Warren Buffett likes to buy undervalued stocks. So what does he see going forward? Because this company is currently burning cash. Well, it once was a almost $700 stock, and now it's a $27 stock. Given that was before the 2000s, we can see that the trailing 12-month PE over on Siri is negative 4.47, meaning the company is drastically losing money. So the company's not profitable right now. However, analysts are expecting the company to be profitable next year. And many stocks in the sector trade at 18 to 26. So if this is the case and analysts are correct and Warren Buffett is correct coming into next year, the company is actually insanely undervalued. But there's no certain answer that there's going to be a turnaround just yet. Now, the 2-year forward PE as well shows that the stock is actually still cheap if they actually turn profitable. They also have low price to sales. So Siri is cheap based on revenue, but low multiples often mean low growth expectations. Now, they are also cheap for the price to book ratio. The company is below its book value, so their assets to liabilities, and their price to free cash flow shows that the stock is also very cheap. Now, the market pays 20 to 25x for free cash flow in strong companies. So this is suggesting that Siri is insanely undervalued again for the second time if cash flow ends up coming out positive, remaining positive, all that other stuff. But you take a deep dive, as of right now, the company has experienced horrible losses. They're expected to turn profitable next year. They do have shrinking sales. Next year's growth is likely to remain somewhat flat and dig them out. And even 2 years out, it's not looking like there's going to be any crazy expansion. Now, either Warren Buffett knows something we don't, or the more likely scenario, which is exactly how he invests, is he's investing for the long term. Now, I don't think next year, I don't think 2 years, but in 2027 to 2035, I think Siri will get its, or 2027 to 2030, right, will get its move back up, like Warren Buffett is expecting, back to being a $200 stock, maybe back to being a $600 stock. Overall, it does indicate it's undervalued depending on what they have going forward. Domino's Pizza, this guy loves Domino's Pizza. I don't know if he likes the pizza or just the company, but it's trading at $4.76 with a $16.46 billion market cap, just like Ulta. Has been just an insane growth play over the long term. If the market bubble pops, Domino's is going to pop with it. And if we take a look into a deep dive of Domino's financials before I show you the other stocks that he actually added on to, and we talk a little bit about Apple, Domino's has a high return on investment, showing strong profitability and efficient use of capital. They also have strong net margin, more profitable than most companies in their sector, and their expected growth next year, after a weak year, remains strong. They also have obviously brand strength and market expansion. Domino's is just huge as a whole. However, they do have an expensive valuation. So if the market does end up taking a dive, this will correct itself back to fair value, which I assume Warren Buffett would just pick up more. Now, they also have a current year earnings per share and a revenue decline. Earnings per share is expected to drop 12% and revenue 20% this year. So I don't know why he entered now. Their gross margin is below industry norms, and their price to book is negative, indicating high debt levels or accounting issues or something else. Now, he also ended up adding into these stocks Apple, AXP, and STZ, which I have all compared and overlaid over each other to try and figure out if there was something similarly that he was looking at. Now, STZ, I think, was actually a good buying opportunity for Warren Buffett here. We came down to extremely oversold levels. Anywhere in this zone of these two red lines I have drawn out for you, I think is a great buying opportunity for this company. So in that case, anything under 162 to 144.50. If we broke under 144.50, this stock could show some warning signals for a dip down to 100 or even less than that, right? But Warren Buffett bought at a great time because he likely bought in this zone when it dipped to 160 or anywhere in this range down here, indicating that this stock is very, very oversold. I actually think this was a good entry that he got. AXP, American Express company, has also just shown that it is a very, 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 very strong growth play over the long term. Next levels to watch are 340 and 375. And if we get a retrace, 284, 229. And I actually think that he was right on Apple, but wrong on Apple. Okay, so he is staying in Apple for now, but I assume, right? If Warren Buffett's a smart guy, I assume he will be selling Apple over the next 3 to 5 months. And the reason I say that is because I expect Apple to retest near highs and break highs around 263, but I potentially don't see Apple going higher than that. Given if it does, I would watch for a high of around $305 over the next few months. At some point during this window of the price scaling higher, I expect Warren Buffett to sell. He has sold recently, okay, as Apple climbs. Apple failed to invest correctly into AI like other companies like Meta, and I do think that they will scale up into April, maybe May, June, but they will top out, and the rest of 2025 will be a painful year until next April of 2026 for Apple, in which case I think we do get another dip by opportunity back closer to $200. Again, this is a stretch, but this is what I see happening. STZ looks undervalued based on PE, PEG, and free cash flow, but has weakened net margins and is coming off a bad year. The massive expected EPS rebound could be why it's so cheap. So he's correct at buying STZ. AXP is fairly valued and growing steadily with solid profitability and a strong return on investment. So he is right for purchasing AXP. Apple is expensive but maintains strong margins and stable growth. However, its PEG and price to sales ratio suggests it's overvalued relative to the market, which I think I hit the nail on the head right there. This is what Warren Buffett has just done with his portfolio. This is the breakdown. And if you want a website like this that shows you the entire financials, SEC filings, earnings calls, and allows you to compare these tickers to one another, this is 1000X Stocks. I will leave my affiliate link in the comments down below. I also want to note that you can go under any one of my videos. The top link in the description is for my Discord server where we talk stocks and crypto in there all day long and we trade on the daily. I also post my trades in there as soon as I take them. So if you're ready to level yourself up for 2025, make sure to join my Discord server. Some of the gains that we see in there are absolutely insane, and I don't think we miss trades too often in there unless obviously they're a YOLO like an earnings trade, which is a little bit hard to tell what is going to happen obviously. The second link in the description is for a free broker. You can use it. It has powerful tools, but they also give you more than your bank account likely gives you on your cash that is sitting when you're not trading. 8.1% APY. No risk. Use the link, open an account, and deposit into the broker, and you're going to get up to 30 free stocks, courtesy of me and Mumu. And then you're also getting level 2 order book data for free, access to trading options, going long, going short, viewing other exchanges, a customizable earnings calendar, earnings calls, market updates, and more, all for free. Oh yeah, and also in my Discord, we have tons of stuff like dark pool trade alerts, insider trade alerts, analyst grades on companies, the market news as soon as it comes out, option sweep alerts, and plenty of other benefits. For the value you get out of it, it is insanely cheap. That is it, guys. Enjoy the rest of your weekend. I love you all. God bless. Lottery Stocks out.